you say there is no ambiguity in terms of how cryptocurrencies are treated. They say VDA and we know how it's treated. But then for somebody who is a taxpayer as an individual, see, there is a lot of content out in the internet where you know that you have to pay 30% tax. That part is clear for everyone. Now the question arises as to how do you put a purchase cost to it for a miner?
Yeah, that's a very interesting question. Say, on cryptocurrency, there is a mining concept which is very...
Okay, just for context of people who are listening, if you are a miner, then you are earning cryptocurrencies in two ways. Either you're getting the rewards for mining or you're getting the mining fee, right, for confirming transactions in the typical sense. So this is two kinds of earning. Both of it is accrued as cryptocurrency,
yes,
right? And there are four ways in which you can use the rewards that you accrue. One, you can hold it as it is, as the cryptocurrency that you receive, or you can pay for a certain thing that you're buying. Let's say you bought a pair of diesel jeans on some international website and they accept cryptocurrencies. So you can pay using the cryptocurrency. And the third thing is you can use the cryptocurrency that you've earned from mining to buy another cryptocurrency. Like for example, you're mining Bitcoin. With the Bitcoin that you're getting, you can buy Ether. And the fourth one is you sell your Bitcoin, you get money in your bank account. Right? So can you explain on how these four things are treated and what is the purchase cost?
Yeah. So to explain this, I have to go to the finance bill. I'm just giving a basic hint as a finance bill. What happened in finance bill is there are several sections which has been introduced wherein whenever a person is dealing in cryptocurrency, the sale consideration except for the purchase cost. Okay? Only allowance is purchase cost.
Correct.
Whatever is the profit you have made out of it, 30% is straight taxed.
Okay.
Okay? 30% is taxed on whatever gain you made. Only direction which is available is the purchase cost. Yes. When you are a trader, you are going to purchase it. You know the purchase cost. What happens when it's a miner? So what happens when it's a miner is he generates Bitcoin using his system or his staffing and a lot of infrastructure costs is being involved. So he earns cryptocurrency, or let's say for an example BTC. Okay, it incurred on a particular day. The rate at which it is traded on that day can be taken as the cost, taken as the income also. So when I file my income tax returns, I will file this income from mining as a business income. Okay, this part is over. This part is classification is done. The next part comes to the fourth classification. What I'm gonna do with the cryptocurrency earned. I'm gonna convert it to other currency. I'm gonna sell it and make it as cash. All these four categories. Now, in that scenario, the income which you shown as a mining income will be classified as your purchase cost, and the selling price will be considered as your consideration. So the difference between both is the profit and tax will be calculated.